Hey everyone, and welcome back to a brand new explainer right here on the Gap Advisors Ind AS Clinic YouTube channel. I am so thrilled to have you with us today. If you're looking to really master the finer details of financial reporting, you are in exactly the right place. Today, we're diving into a fascinating clinical case study we're calling the clinical case of the vague accounting policy. We're going to see exactly how a few seemingly harmless words in a financial statement can actually totally obscure the truth.
Here is a quick look at our diagnostic chart for today's session. We'll start with our welcome, move to the vague policy observation, dissect the confusion, review the Ind AS 1 standard, deliver our final diagnosis of obscured information, and wrap up with some essential Gap Advisors resources.
All right, Section 1. Welcome to Ind AS Clinic. Let's get our baselines established.
Before we open today's file and really dig into the evidence, let's establish our baseline vitals so we are all on the exact same page. For this specific case, the functional and presentation currency is the Indian rupee, or INR. Naturally, that means foreign currency is defined as any currency that isn't the Indian rupee. And the reporting period we're dealing with, it's the standard timeline, running from the 1st of April to the 31st of March.
The origin of this particular case is actually super interesting. This observation comes from the published Ind AS financial statements of a listed company, which we downloaded and independently reviewed suo moto at Gap Advisors. It was originally featured in the 220th edition of the Task Weekly newsletter, authored by CA Manish C. Iyer, director at Gap Advisors, and published on LinkedIn. With over 230 editions published to date, if you're on LinkedIn, you really should subscribe to that newsletter for free. It is packed with insights.
Moving on to Section 2, the vague policy observation. Time to look at the symptoms.
Let's look at exactly what this company published. Their accounting policy for general administrative expenses explicitly states, general administrative expenses which are directly attributable are allocated to activities, and the balance is charged to statement of profit and loss. Now, on a quick skim, that might just sound like standard accounting jargon, right? But if we look a little closer, we uncover a massive problem hiding in plain sight.
Section 3, dissecting the confusion. Let's systematically break down why this wording is so problematic.
The very first issue we hit is this vague mention of allocating expenses to activities. What activities? The policy has absolutely zero specificity. When a primary user reads this, it implies the company is capitalizing these administrative expenses to the cost of assets. But without clearly defining what those activities actually are, we are literally left in the dark.
And that brings us to the next logical hurdle, which is honestly a big one. General administrative expenses, by their very definition, are broad business overheads. So it makes zero logical sense to claim that these broad overheads can be directly attributable to specific assets. It entirely contradicts the core nature of what an administrative expense is meant to be.
Finally, let's look at the tail end of that sentence. They state, the balance is charged to the statement of profit and loss. Okay, sure, but simply stating the name of the statement is nowhere near enough detail. Where exactly inside that statement is it landing? This complete lack of clarity means it's time to consult the medical texts of our profession, the accounting standards.
Section 4, the Ind AS 1 standard. Let's see what the rules actually say. Check out paragraph 10A of Ind AS 1 regarding presentation of financial statements. It explicitly states that an entity has to present a single statement with two distinct sections, the profit or loss section and the other comprehensive income section. By just vaguely saying the balance goes to the statement of profit and loss, the company fails to tell us which of these two critical sections the expense actually hits.
This directly triggers paragraph 7 of Ind AS 1, which clearly warns us against obscuring information. You know, information is obscured if it's presented in a way that basically has the exact same effect as if you just omitted or misstated it. A perfect example? Using vague or totally unclear language for a material item. That is exactly the situation we have diagnosed here today.
Section 5, diagnosis, obscured information. Time for the final verdict.
Looking back at the symptoms, the clinical verdict is undeniable. By disclosing such a vague and unclear accounting policy regarding how it handles general administrative expenses, this company has officially disclosed obscuring information. It completely muddies the waters for primary users trying to grasp the true financial reality of the business.
Finally, Section 6, essential Gap Advisors resources. Let's talk about preventative care.
Over 4,500.
That is a staggering number, right? That's actually the number of real-world issues and detailed responses on Indian accounting standards and Indian GAAP currently hosted on the completely free issue repository at gappadvisors.com. Anybody can register for free. This is an absolute lifeline, particularly for auditors out there who need to strictly document exactly how they addressed a specific issue relating to Ind AS application. When you register at gappadvisors.com, you can actually submit your own issues and get a detailed response sent straight to your email inbox. But honestly, the best preventative measure? Get your financial statements independently reviewed by the team at Gap Advisors before you even sign them. You can easily submit your near-to-publishing PDF format statements via email to info@gappadvisors.com for a comprehensive review.
Thank you all so much for your time today. If you found this explainer helpful, please hit that like button. Add your comments below, and subscribe to the Gap Advisors Ind AS Clinic YouTube channel if you haven't already. I also highly encourage you to share this explainer with your contacts, colleagues, audit and finance teams, and especially CS students, so we can keep spreading the knowledge of Indian accounting standards. And hey, if you want a real deep dive into today's observation, be sure to connect to the Gap Advisors Ind AS Clinic podcast available on Spotify, Amazon, and right here on YouTube.
Just a quick standard reminder before we go. The views expressed in this explainer are the personal views of the author and are totally non-binding. We always recommend that you seek the help of a qualified expert before taking any action or refraining from any action based on the discussions we have here. I want to leave you with this final, somewhat provocative thought to chew on before our next session. Take a look at your own company's reporting practices. Are your accounting policies actually revealing the financial truth, or are they just obscuring it? Think about it, and we will see you at the next clinic.